Okay, so the busiest season is hands down your results season. It tends to be the busiest time of the year. Results happen 4 times a year. So obviously, results is a very time sensitive thing that happens in equity research because let's say results have come in today. So your research report needs to go out latest by tomorrow morning, right? You cannot delay beyond that because obviously it's very time sensitive. You'll have to update your models, you'll have to write a research report, and you'll have to update your assumptions and everything. So that takes a lot of time. And if it's the financial year end, then it's not just about updating the 1 quarter, you'll also have to roll forward your models for 1 year, right? Because your financial year has ended, so now you need to do roll forwarding. So that takes even more time. So honestly, results season tends to be very busy. Depends on how big your team is, how many companies you are covering. But if you are covering anywhere between 15 to 20 companies, then it tends to be very, very busy for you. It also depends on at what time of the day is your coverage company declaring the results. So if the coverage company is declaring the results at 10 p.m. in the night, then congratulations, you're not going to sleep that night. If multiple companies are declaring results on the same day, again it becomes very busy. You won't be able to sleep. So results season, yes, it's very busy. During that period, you might have to work on weekends as well. But otherwise, it is surprisingly sustainable. Uh, then it also depends on, are you doing some initiating coverage in that year, because in the initiating coverage report there is a lot of work. I mean, I initiated on a lot of companies during my stint, and there's a lot of industry research that goes on. You have to build models from scratch, so it's not like you have a ready-made model available. No, you have to build models from scratch. All of that takes a lot of time. So if you have a lot of companies that you are initiating on, it tends to be busier. And if by chance you're working on an IPO deal, which means you have been taken over the wall, you are interacting with the investment banking team, you are going to write a research report using the red herring prospectus and all. So obviously in that case it does become busier. But otherwise, rest of the year, equity research is surprisingly sustainable. Work life is pretty decent, and definitely a lot better than investment banking. The pay structure is very good. The bonus is superb. It depends a little bit on how the markets are performing, but from whatever I have seen, it's very good. And let's leave it at that because I don't want to quote any numbers. Okay, the day starts pretty early. Honestly, since I was working with the front office, the day starts before the stock market opens. So my day used to start at 7:30 a.m. So most of the days at 7:30 a.m. the floor is very busy. Everyone has definitely popped in. The news channels are on, and it's very busy. It's bustling in the morning at 7:30. It's really amazing. So every morning there's nearly a half an hour of meeting which happens with the sales desk. Now, why does this meeting happen? Basically, you need to understand this about equity research, that equity research is split into two parts. One is the research team. Now, this is the team which, researches on various stocks, comes up with investor recommendations, writes research reports, makes the financial models, etc., etc. And then there is another team which is the sales team. Now, the sales team is actually the team which interacts with the clients, which answers the client queries, and which basically, it's like the intermediate team between the research team and the ultimate end clients. So obviously, because they are the intermediate team, the research team needs to communicate on a regular basis with the sales team, and for this purpose every morning there is a meeting. These meetings are super invigorating to be a part of. It actually feels like you are sitting in some news channel, because there are lead analysts of all sectors which come together for this meeting. Everyone talks about the updates for their sectors, what has happened in the last one day, what is the new things which have happened in the market, how is it impacting the companies they are covering, how is it impacting valuations. Every single day the markets are tracked, and what is the impact on your sector, on your coverage companies, that is reported to the sales desk. The sales team will basically ask questions. They will basically try and ask, the various pushbacks which the clients may have, and there is a Q&A session involved over here which is super invigorating. So I never missed these morning meetings. They are absolutely amazing to be a part of, and the day starts off with a banger. So it's pretty fun, honestly. The teams are pretty small in equity research. Now, of course, it depends on the markets which you are covering. So, I was covering the Indian markets, so our team was pretty small. If you are covering larger markets like US or Europe, there the teams tend to be larger, because the number of companies under coverage are more. Typically, I think the India team has around 22 to 25 people, so that's honestly a very small team size. And even within the team, there are different teams which are covering different sectors, which are covering different industries. So, for example, there is a team of 2 or 3 people who are going to cover the FMCG space. There will be a team of 2 or 3 people covering the industrial space. There will be a team of 2 or 3 people covering the oil and gas segment, right? So, like this, the entire team is also split into very small sub teams covering specific sectors. Now, every sub team is working fairly independent from each other, so not a lot of cross team dependency. So if you are covering let's say oil and gas, you don't have a lot of dependency on a team which is covering industrials or on a team which is covering IT sector. So in that sense, yes, there is a lot of creative freedom, there is a lot of autonomy when it comes to work, because the team size is smaller. Your team is typically led by a lead analyst. Lead analysts are people with a lot of experience. They are people with 10-15 years of experience, super knowledgeable people, a lot to learn from the lead analyst. And then there are junior analysts who are basically qualified people from the top B schools of the country, who work supporting these lead analysts. So when you enter equity research as a beginner, you will not enter as a lead analyst, obviously. You will enter as a junior analyst, and as a junior analyst, your primary job will involve financial modeling, a lot of financial modeling, understanding the sector. So let's say you have a background of a chartered accountant, or you are someone who is from a finance background and you get allocated the industrials desk. So there is no option that you have to understand a lot of engineering concepts. You have to understand a lot of concepts related to the power sector. What is voltage, what is ampere, what is a lot of things, right? So there's a lot of sector specific understanding, which is honestly 60 to 70% of your job, understanding the sector. And the other 30-40% is making financial models and writing research reports under the guidance of your lead analyst. So I think that is it for this video. I hope you found the video useful. If there are any other questions that you have around equity research, around JP Morgan, do let me know in the comments below. I will try to make another video on it. And if you want to understand how can you break into top banks, into front end roles, feel free to book a session with me. We can connect one-on-one and we can figure it out together. Until then, keep studying and keep leveling up. I'll see you soon in a new video.